Okay, for today's lesson, we're going to be doing trends, resets, and peaks. No, we're going to be just doing trends and resets. That's what we'll be doing today. For today, we'll be doing trends and resets. We're doing trends and resets. So, welcome to tonight's lecture on trends and resets. So, uh, in DTMM, also known as BTMM, we have what's called the market maker cycle. So in this market maker cycle, there is what's called a trend. There's what's called trends. So there are two types of trends. There's the market maker trend and the retail trader trend. And the retail trader trend. That's what everyone else sees. The market maker trend is the real trend. This is the real trend that's used by the market maker. That's why thereby being called the market maker's trend. Then there's the real trend, real retail trader trend, the what everyone else sees. Um, this trend is set by the market makers, or both the trends are set by the market makers, and they can be reversed anytime. Meaning, the market makers are only looking to make a profit. They're only looking to book a profit. So they just move the price and move the trend to the direction that is most favorable for them to profit. So thereby it being written here as the market makers set the trend and they can reverse it at any time. That's just because they want to make profit. These guys are after our money, are after people's money, and they do make money and they move the trend in the direction where it makes them money. So this simply is sort of an advantage to traders like us who trade using the DTMM. So this simply means that we we can trade in both ways, both buy and sell, not on the same particular trade, but then it simply means we can go in for a buy on a certain pair during the day, then later in the later during the day we can go in for a sell. This usually happens during the two sessions. So for one session you see that on such a pair, on a certain pair, you can buy it in during the London session, then during the New York you sell. That's what that's how we as DTMM traders benefit from it. So uh but then it sometimes can become so confusing that it is a disadvantage, that to the extent that one can miss setups because it will be confusing. I hope you get what I mean. It will be confusing. So the trend usually the trend usually is a 3 day cycle, but then sometimes it can exceed up to 5 days or 8 days on just a particular trend. So, but the general number of days of a particular trend cycle is 3 days. So during the first day, this day is usually the reversal day or the peak formation, high or low, and that's usually Mondays. That's usually Mondays. That's where we experience either it's reversal from the previous week, from the previous week's trend, or we are forming a peak formation high for that particular week, or peak formation low for that particular week. This usually comes as a surprise, catching many, catching everyone following traditional indicators and strategies, traders off guard. So you don't know what the market makers are doing, how they're going to do it, but we just wait. That's how we are different from retail traders who will be surprised by these moves. But for us, we know that this is the day one of the trend, and we are expecting a reversal or a peak formation high or low. And then after the peak formation high or low is formed and the reversal is formed and is locked in. We wait for patterns to form and come into play, then we trade the pattern at the right timing. The timing is also important. So we are just looking for the right patterns at the right time. So this such movement is usually facilitated and justified for by the market makers using news. This simply means the market makers hide behind news. They hide news. They hide behind news and blame the news for moving the market. Yet they're just forming this. They're just succeeding in forming a reversal, or they're just succeeding in forming a peak formation, high or low. That's the main purpose of the moves. Yet they'll be hiding behind the news, blaming the news. The news is dangerous and it should be avoided at most times. We don't usually trade during news time. We don't trade the news. We don't trade the news. We trade the patterns during our right timings. We don't trade the news. We don't trade the news. We are not gamblers. We are traders. News usually those who trade news usually gamble, but then we are not in for a gamble. We're in to win. For we are winners because we're trading along with the market makers, with the market maker cycles, and along with the market makers and the big hedge funds and the bankers and the banks. Uh, Therefore, making us the few 10%. So news should be avoided. The trend day two. This is where usually this is where usually the retail traders, those who trade indicators and those who trade some patterns like the what's this called, the trend lines and all those things. That's when their strategies are validated by the market makers. That's where they sort of like give you some money so that they can later take some money from those people who use those traditional technical strategies. So those who traditionally trade the Fibonacci and all those those funny indicators, that's when they are validated. That's when they are validated by the market makers, just so they can give you something before they take that something from you. So that's why all those people trade crossovers and whatnot, and that's where it all happens. That's where it all happens. But for us on the trend day two, we're expecting a 50 200 cross, and that means we're expecting a level two move. And the level two move, on the level two move, we're expecting straight away trade there. That was what we called a straight away trade. We'll talk about it in the next few chapters. This gives so on the trend day two here, on the trend day two, on the trend day two here, this is this is when this is when the retail traders hop into the market and trade and enter the trade, execute their trade. The majority of retail traders may still be unsure at this point, and the wave community is yes. Some will be waiting for their strategies to be fully confirmed so that they can enter the trades. So I'm checking those traders. So waiting for the big day now, getting into the big day, the trend day three, the trend day three, the trend day three. Traders are now convinced that the move is real now. After they have the strategies confirmed, the trend lines, all those broken, fake out, breakout traders, the support and resistance are broken. You know those traditional indicators, the Fibonacci, the Haramis, and all those, they're all confirmed, right? So after they're confirmed, they they are convinced now that this is a real move. Then the market makers show acceleration and separation from the moving averages. and you all know what will be happening then. We talked about this when we talked about levels. May sometimes they may use news, as you say, the market makers hide behind news to make big moves, to they hide behind news to move volatility, to move volume. They hide behind news. That's the main purpose of news. News is not just some they are not they're just there for the market makers to hide behind them and to move the market using news. For they cannot just for they cannot just move the market and show acceleration of volatility for no apparent reason. They need they need news to hide behind it, and so that they will make their moves. And all this is just being done for them to collect enough contracts. And after they collect enough contracts, they easily apply the brakes, trap traders and retail traders the wrong way. But not us. We are different, guys. Let me show you what happened today. This is just what this is exactly what is being said by the statement. Let me show you here what happened. So the market makers were in this uptrend right here, went up here, gave this triple M here, second leg of a second leg on the ADR, then it gave this shifting candle here. Let me clear. It gave this shifting candle here. Closing below the 13 EMA here. Then what happened? Do you see what happened? It changed direction. This candle indicates acceleration. So the market makers then in another candle here indicating acceleration here. So this simply means the market makers just they didn't use news, but then they used these big candles in. So they would rush, then they'll slow down, then they would rush again, then they'll slow down. So what's happening here is the market makers want to make it seem not want to make it seem. So what happened? The market makers want induce traders to take buys here. Once they collected enough contracts in the buy trend, they decided to change it, thereby trapping here, thereby forming this structure here, trapping triggers. This is mainly for trapping triggers. Structure there on the structure there, this structure on the ADR, and it gave a pin. Okay, I hope you can see this pin. Gave a pin here. Gave a pin here. Then it shifted. Gave a pin here. Then it shifted off here. Shifted off here. Then it went into this direction, blowing, take margin calling traders who were waiting for buys here. Buys, then it trap them here, then it shift the direction. So those who had removed their stop losses would have been margin called all this way whilst the price was moving to the lower side. Yeah. Then after they had collected enough contracts, what did they do? They bragged. They put on the brakes, as you read. They put on the brakes here. They put on the brakes. They put on the brakes on the 200 EMA. They put on the brakes on this area. So when they have collected enough contracts at this level, they will apply brakes and trap everyone, retail traders, and the wrong way. Yeah, this simply means, yeah. So after after margin calling and stop loss, hitting the stops for those who had went in for buys, for those who had removed their stop losses and were holding, the market makers the market makers shifted off to this EMA. Then after collecting enough contracts, it then put on the brakes. So they are, and thereby trapping other traders who had went in for sales here. There are traders who saw this movement here and entered around areas like this ones. Then they went in for sales, but then the market makers put on the brakes and stopped here, thereby trapping traders who had went in for what? For sales around this area, around this area and this area who had went in because of the acceleration to the downside. So there are traders trapped. In the meantime, as we're speaking right now, there are retail traders who are trapped right now. As we speak, they're trapped. They are hoping for the market to move their direction to the downside, but then the market is just going to go wherever it wants to. It might choose to go down a bit, then bounce up, or it might choose to just bounce off the EMA, the 200 EMA here, and just choose to go out to the upside. So they choose what they want to do. So as we speak, this is not a joke. This is not a play. There are traders who are trapped. Retail traders are trapped right now. Let's move on to the charts here, to the safe charts here. So what happened here? As you say, on the first trend day one, this way the peak formation low is formed. As you can see here, it's indicated by the yellow. Is indicated by this yellow rectangle here. This simply is indicating the peak formation low. So what went on to happen? What went on to happen is a peak lock. Peak lock went on to happen. There was a lock on the peak, which is shown by this 13 and 50 cross here. This simply shows that the peak was locked. The peak formation low was locked. Then what then went on to happen? Price, so thereby forming level one. So let me indicate the levels here. Thereby forming level one here. So what went on to happen? Price went on to push to the upside, stop until to the low, then pushed on more to the upside, giving us the 13, the 50 and the 200 EMA, which is level 2. Let me indicate it there. So beautiful. What went on to happen? The price pushed to the upside into next week. Thereby, what happened at the beginning of the week? There was reversal and formation of the peak formation high, indicated by this yellow, indicated by the yellow, indicated by the yellow rectangle again once more, as you can see, yeah, and thereby trapping long traders after they would have convinced traders to go to take trades to the upside here. They then trap long traders here and then shift price to the downside. Just the same thing. So this is our induction. Induct there's our motto. In that induction, trapping, then the shifting, the shifting. So it is on this shifting that we make our money as DTMM traders. Make our money on the shifting moves. Um, so that's all about the trends, guys. We talked more about these things under the levels section. So now we're getting into the most beautiful part that I love, resets or peaks. Resets are also called peaks before we go anyway. Resets are also called peaks. Resets are also called peaks before we go anyway. So what are resets? Sometimes what happens? What happens is, listen, sometimes market makers will need to continue the trend and not reverse the direction, meaning that there will be some traders who would have like uh, gotten clever and lucky and once and would have guessed that the price is supposed to reverse at a certain area, and the market makers will know that due to some technical traditional strategies such as the trend lines and the like and the Fibonacci and all those that the market makers know of. So what would the market maker do? They want to trap those type of traders, and how will they do that? By not reversing the trend, by not reversing the direction, but by continuing with the same trend. So what? So that's where these things here called resets come into play. Come into play. So I'll be talking about resets in my next video. In the next video that we're going to do, that's where we'll be talking about resets. So right now, I'm going to open the chat box so that you guys can chat with me on the trend and ask me some questions before we get on with the resets here on a separate video chat that we're going to do right after. We're not going to have a break today. We're just going to go straight into it. Just after we finish our questions and answers, we get on to the next video. No break. We're just going to change the video. We're just going to close to end this session and start a new session. So I'm going to open the chat box now so you guys can ask and we can get to interact and talk. So your questions, guys, I'm looking for them. I'm waiting for them. I'm waiting for them. Questions, guys. Questions. Ask questions. I'm waiting for your questions. I've opened the chat box here. Or if you want to show your video or talk, yeah, if you want to talk, I could give you the chance today. I'm in the mode of having people talk. Can resets happen on Monday? Yes, that's where the part that we said on the first day of the week, meaning on Monday, the trend day one, we expect reversal or formation of the peak formation high or peak formation low. So the resets are part of reversal trade setup. So they can happen on Monday. They are likely to happen on Monday, most of them. So wait, there's some secret that you can use to see the resets that we're going to talk about in the next few minutes, in the next session. Do you still do the live session in London Open? Well, I don't do that, but I could do that. I just do that depending on the mood. Today I didn't do that. Today I was focusing on the signals group. We have a signals group, so that's what we're doing, and we did make money. We did took profit. Our take profits were hit. If guys from the signals chat are here, they could confirm. But stay tuned. Just stay tuned. We could just do something tomorrow or the day after tomorrow. We just depending on the mood. Don't worry. Or the requests. How does one identify a reset? Stay tuned in the next video. We're going to talk about it in depth and we're going to understand it. When do we stop trading in December? Actually for myself, I don't stop trading. I just use the stop loss. I just use the stop loss. The stop loss will stop me, so I don't stop trading. I don't have stops in trading. I just stop trading during news time only. I don't stop trading, and I also encourage traders, us DTMM traders, not to fear the markets, but to use our stop losses. The stop loss will save us from blowing our accounts, and we will never blow accounts. Who blows an account? We don't blow accounts. Is there a way to identify the beginning of the trend? Yes, there is. That's the formation of the peak. That's the formation of the peak. That's the way that we identify. It's either formation of the peak or the formation of recess. And formation of the peak, we're going to talk about it in the next section. There is a particular video for only that. It needs its own time and attention. Oh, yes, it will be discussed when I'll be presenting on peaks. How you spot reversals from wicks. How do you spot the reversal from wicks? How do you spot the reversal? I hope you don't mean, is that part of our strategy? We don't trade wicks. We don't trade wicks. We look for the pattern. We have patterns in BTMM, GTMM that we look for, and I know of pins, not wicks. Okay, is that the same thing though? But not necessarily that there is a certain strategy or certain pattern that we just look at the wicks and pay attention to the wicks to spot reversal. No. We have many confirmation, and wicks are just an additional small confirmation that we use. The pins to the May, it's either pins to the May or pins to the 50, pins to whatever. The peak formation, the peak formation of forms on Monday mostly, or when particular. Yes, Monday mostly, but sometimes the market makers vary these things, vary this peak formation. That's why it's important to just know how to identify the peak formations, because they can happen on Monday or Tuesday or Wednesday or Thursday, any day they can happen. Peak formation highs or lows can be formed on Friday actually. Any day, any time they can be formed, but mostly Mondays, that's when they're experienced. So it's just important that one knows how to identify and tell that this is a peak formation, low or high. Can you walk us through what happened with GBP JPY? Well, I can walk you through the trade that I took on GBP JPY today. I'll do that at the start of the next session. Yeah, talk about today's trades. Yes, I'll talk about them in the in the next section in the first few minutes of the next session. That's when I'll talk about the trades that I took. I only trade two pairs. I think you know that now. So I'll just talk about those. Can EA trading make you profitable? I don't believe in EA. I don't believe in that. But it works for some people. It doesn't work for some people. I've never tried it, so I cannot give a certain comment on it. Thanks. You're welcome. I was wondering, the TDI. Don't worry about the TDI. We're going to talk about it in a particular video. There's going to be a particular video for it, for the TDI. More questions, guys. More questions. More questions. More questions. More questions. You cannot say that don't have you don't have something to talk about or to ask. Yes, there is a mentorship class. You can get to me on my Telegram. We can talk about it. If you want to join it, there is a Signal group too. We can talk about it. You can just get in touch with me. Get reach of me on my Telegram. What level is GU at now? Well, right now I don't trade during this time. I trade London session. That's when I look for the levels and look for which level the a certain pay is or is at. But then I will do that for you at this time as an exceptional in the next session. That's when I'll be talking about today's trade. Do you have like, yeah, I do sometimes, but sometimes I do not have them. Just depends with the mood. Can I trade using market structure and DTM together? Of course, market structure is key. What do you do when the other trades during the other? I wait for the New York. If there is no trade in New York, we'll call it a day, or we'll see, we'll check tomorrow. We'll wait for tomorrow. We have no way to rush to the market maker. Is not the market is not going anyway, and the money will never finish. So we just need to wait for our patterns to form, for our trades to develop. What's the best time to trade? London Open and New York Open, that's the best times to trade using this strategy of ours. And weekly reviews. I'll be doing those videos, I think starting from this Sunday. I'll be doing weekly reviews. So stay tuned on the Telegram, on the YouTube channel. What's the best time frame?